Time for the FOMC report. Kevin Walsh, are we going to get rate hikes? Are we going to get rate cuts? Nobody wants a rate hike. We could all just do with a pause. Some would prefer a cut. For me right now, I'm in margin. It doesn't really bother me, or doesn't bother SpaceX too much either way. For me, in margin, I would like to see rates held where they are. If they get cut, it will look like a bit of a reaction. So a rate cut is good initially, because if anyone borrowing money gets cheaper money, that would suit me being in margin, but it's not necessarily a good thing if the economy can't really afford it. So let's see what happens. We've only got 28 minutes to go. We're going to cover it live. It's going to happen live. We've got the live conference. It's going to be a big, big day. After this, we've got Sensei breaking it all down. And Sensei is going to do deep dive reaction to it. Presenting you with charts for different stocks that you're interested in. I'm sure SpaceX will be there, crypto, XRP. A lot of people here are very interested in XRP. All of that will be covered today. Then we have Meta earnings, and then we have Microsoft earnings. It is back-to-back fun and games today. It's going to be a big one, a big, big afternoon. And I've got lots to read from you, lots to read for you from our cheat sheet. So we are set and ready for the Fed report. So without further ado, can everyone tap the like button? Have you all done that? It's going to be a big, big event. I've got the gold jacket on, the gold jacket of opportunity today. That's why we're wearing this. And also consider subscribing, be part of our family. Now you'll see pinned to the top is the newsletter and the cheat sheet, and of course Discord, so you can see all of my trades and be part of it. But let's get straight into it without further ado, because we've only got 27 minutes to go. The Fed decision. It's going to be a big one, this, and here we go. The Federal Reserve held rates for 4 meetings running. Markets put roughly a 1 in 3 chance of it rising today. This report covers what retail investors are asking, what we expect the committee to do and say, and what is good and bad to hear. So it gives you everything that you need today to be able to trade this. We have our very own award-winning newsletter, and we have our very own cheat sheet. Every single event we do this. We have the SpaceX book you could all get, and all the rest of it, plus a training course, video training course, chart indicators, everything. Here it is once again. Let's see if my links work this time. We drop it in the chat right now. Yes, there it is in the chat and pinned to the top. There is X, there's Instagram if you want free shares of Robinhood USA and free shares of Robinhood UK. If you're watching from the UK, there are the links. Right. So our call, hold at 350 to 3.75%. Hawkish tone, 10 votes to 2. This is what we think. We put roughly 70% on a hold with hardening language and 2 dissents in favour of a rise, 25% on a surprise quarter point increase, and the rest on outcomes that read either much more hawkish or dovish than that. September is the meeting that decides this year. The next one in September will decide where we go. 3 things put us here. Governor Christopher Waller set a public condition on July 13th. If core inflation came in hot that week, the committee would need to consider tightening. It landed the next day at 0 on the month. So his own trigger did not fire. The banks across America finds the Fed has never raised rates with under 60% priced in beforehand. And the committee decides today, then gets its own inflation gauge tomorrow morning. What changed overnight is oil. Oil is everything. Brent fell from above 100 to almost 87 on ceasefire hopes, which is what pulled the odds of a rise back from 38 to 31%. Then America and Iranian forces traded strikes again. Brent is back near 88 this morning, up around 4%. The input that drove the whole repricing returned on decision day. Absolutely. That's why the market is extremely volatile. We have seen massive swings. I was down like 30, 40 grand and now I'm down 6. It's up and down. A few moments ago, I was up 2 or 3 grand. We're getting swings on my portfolio of about 50, 60 grand a day, up and down. It's a lot going on the markets at the moment. Right, if you just tuned in, tap the like button. Once we get to 100 likes, it will share it out and more people will get to see the news. Please do tap the like button and consider subscribing our newsletter, and everything you need is in the chat and pinned to the top. We've got 24 minutes to go. Let's get straight into it. What changed? Well, we know it was the oil. So we got a target range here of 3.5. We got odds of that at 33%. Odds of a rise, that is. If you think it's going to rise, put rise in the chat. I'd like you to spam the chat right now. Copy and paste. Rise. So hike, pause, or cut. What do you think? Copy and paste. Let's see some energy in the chat. We love energy here on this channel. So anyway, odds of a cut. 1%. No one thinks there's going to be a cut. Core PCE May 3.4%, highest since October of 2023, and Brent crude up about 4% today, $88. Now, if you want to get this cheat sheet and you want to be prepared, here is our newsletter. All of our Discordians get a great discount, of course, and everyone else. If you're not inside Discord, there is a 25% discount for you. All right. Now then, these are the questions that you're all asking. This is what you ask us through our newsletter, through our show, and then we put it all together for you. These are the questions coming up most this week in the order people are asking them. The rest of the report is the detail behind the answers. All right. So hang on, the Fed might raise rates. I thought cuts were coming. This is a very popular question on our show. Many of you ask this quite frequently. That was the story through 2025. The Fed cut 3 times in a row. In September, October, and December, taking the range from 4.25% down to 3.5 to 3.75. It has held ever since. 4 meetings running. We've seen nothing move. What changed is the inflation went back up. Things were more difficult, right? There's not been a path to cutting rates. Trump put in Kevin Warsh. Kevin Warsh said, I'm independent. And so far, he's been that way. What will he do today? Well, in 20 minutes from now, we'll find out. Will he cut rates today? Another question that you asked was, which inflation number do I actually look at? 3.4 or 2.6%? Good question. Core PCE, currently 3.4%. That is the Fed's official target measure and the one in its projections. Core CPI at 2.6 gets the headlines because it comes out first and is more familiar. The two traps, however, there are different months. Core PCE at 3.4 is May data, and core PCE at 2.6 is June, and they measure different baskets. PCE covers things bought on your behalf, such as an employer-paid healthcare, and it reweights as people substitute between goods. Normally, core PCE runs below CPI. Right now, it's running about 0.8 points above, which is unusual and is a large part of why this meeting is contested. Another question that you asked was this one. Why would they raise rates when inflation just fell? It's a good question. And let me just zoom in a little bit, perhaps. No, in fact, I'm going to leave it there because I'll be off that screen in a second and I'll have to reset it again. So why would they raise rates when inflation just fell? Good question. Because almost all of the improvement was energy reversing. Headline inflation fell 0.4% in June, but energy above fell 5.7 and is still up 15.7 on the year. Core inflation did not fall. It printed zero and stopped rising for 1 month. So as you can see, Trump will say rates are coming down, inflation's coming down, and we should have rates down, but it's not as simple as that. It's a very simple cartoon headline, gets everybody excited, everybody gets, jumps up and down, but really it isn't the actual story at all. It's just a headline, doesn't really make a difference, and the market can't react to it. And the Fed can't react to it either. If you've just tuned in, consider subscribing. We're at 68 likes. If we can get 100 likes, YouTube will suggest this out today. So please do tap the like button. It makes heck of a difference for us. And consider subscribing as well. I'm giving you the cheat sheet inside our newsletter, what we're reading from right now. So you can be prepared. You can get it in seconds, and you can have this right now so you can trade it. Right after I've covered the FOMC report and we've covered the conference, Sensei is going to break it down from a technical point of view, share all the charts, and then we have Meta earnings, and then we have Microsoft earnings. We are back-to-back, like 12 hours in the studio today, live, not going anywhere. If you want free shares of Robinhood UK, there you go. Free shares of Robinhood USA, there you go. And there is my X and Instagram if you want to follow what's going on. All right. So what is hawkish hold? What is a hawkish hold? And why do markets move if nothing changed? A hawkish hold means no rate change, but everything around it points to tightening. Harder statement language. Dissenting votes calling for a rise and a chair who rules nothing out. Markets do not price today's rate. They price the whole future path. If tonight pushes September odds up, every asset that depends on discount rates reprices immediately, even though nothing happened today. So there you go. What happens to my mortgage and my savings? Great question. These are all the questions that you sent into us, which we are asking. They've been asked through our Discord and through our newsletter. So we're answering them for you. So what happens to my mortgage and my savings? If you are on a UK fixed rate, nothing happens tonight. Your rate is locked for the term, or of course in the US, if you are locked in. If you are remortgaging, what matters is the swap curve, which prices what markets think rates will average over the next few years. That is why 2-year fixes sits around 5.2% and 5-year around 5.4, and why lenders reprice upwards in July while banks rates did not move at all. Right, my portfolio is turning green. We're up 50 grand, and then we're down 50 grand, all over the place. I've got $1.1 million all in, all margin. Oh, I've got an itch. Oh, don't you hate when you get an itch right in the center of your back? Oh, bloody hell. Oh, that's a thing to get, isn't it? Anyway, so yes, I'm $1.1 million all in. It says 730 because I'm down about 100 grand. Well, actually down about 50 grand now on this position. But I've got also my Roth IRA, my ISA, and my Robinhood UK. All in total, $1.1 million in SpaceX, all of it. And we are teaching people every day how to remain in the game and do tax lot selling. It's all taught with our training courses and everything else. For a couple of bucks, you can join Discord. It's the only Discord server in the world. No AI, no bots, just us, one-on-one support. That's why it's the best server. And we do things that others charge $100 for and do a worse job. We only charge a couple of bucks. Why? Because as you can see, I've got 1.1 million invested. I make money from doing the job. I don't make money from selling it. I make money from actually trading and investing. So all of my courses are there to help you for just a couple of bucks. There's no coupon and codes that expire tomorrow and it's going to go up to double the price tomorrow. It's always the minimum cost for all of my members who tune into us every day. So there is no dot plot this time. What do I look at instead? So the Fed publishes its projections, which contain the dot plot, at only 4 meetings a year: March, June, September, December. July is not one of them. The next is 16th of September. So today is different. We're not going to get that information presented to us. So you don't have it. All right, you don't have it. You're going to get the tone at the the conference at the end. Right, we've now got 14 minutes to go. What are we going to get? I really hope we don't get a rate hike, because that will cost me a lot of money on margin and it would be bad for the market. I hope we don't get a rate cut. A rate cut would be nice for me, but what's right for me isn't what's right for the market. I want what's right for the economy, and that is a rate pause where we are. Another question that you wrote in was, if they raise rates, do stocks fall? And should I do something before that decision? So we're not going to tell you what to do. We don't. We're not giving you financial advice. We're just sharing our thoughts with you. You're following my journey, Sensei's journey. We invest live on the show, live trades as it happens. I share all my trade setups on Discord, of course, exclusively, and YouTube Electrum. But yeah, everything here is our real journey, our real money, and that's it. I'm not going to tell you what to do. However, anyone who does on a night like this should be treated with suspicion. Yeah, lots of people on YouTube will tell you what to do, or they'll offer you custodian services or training courses which cost a fortune. Everything that we do is virtually for free. We're here to help people, and we make money doing it, not selling it. What we can give you is the shape. A rise could hit long duration growth hardest because those companies' value sits in profits a decade out. Goldman put AI-related companies at around 45% of the S&P market value in April, up from roughly 25 when ChatGPT launched. So that is the index rather than the sector. Banks tend to be the equity winner on what is that there? I'm just struggling. It's very, very small. A winner on wider margins. We're trying to make this bigger. It's perfect size for you in the newsletter, but it's a little bit small for me. Anyway, property and utilities take it through leverage. Anyway, next, scrolling on down. Now, great question. We've got a lot of crypto investors here. Let's go back to our portfolio. Now then, before I bring you any more, we've got 10 minutes to go, 11 minutes to go before we get the decision. I need 150 likes. We have got 394 people watching. So smash the like button. We're not going to do any more. We're not going to go jump up and down. We're not going to celebrate. I'm not going to tell you what the rates are. I'm joking, of course, unless we get 150 likes. Well, maybe. I mean, let's do it right now. Do you know what? I'm going to pump up the music. I just don't care. How long have we got? We've got exactly 11 minutes to go. Exactly to the second, 11 minutes to go. So let's do it. We want 150 likes in 1 minute. In 3, 2, 1, let's go. Here we go. Let's see. Let's bring it up on the screen. Here we go. If I refresh the screen, we're starting out at... We want 150 likes to share this out, everyone. That's better. Now we're moving. Woke everybody up. 109 likes. Boom. That's more like it. There it is, 109. There's 390 people watching. Smash it, everybody. Here we go. 3, 2, 1. And we've now got 117 likes. Fantastic. The most we can get is 150 because 50% of you aren't signed into Google. Our up like ratio is 99.87. We get about 3 or 4 down likes every show. It's always the same. All right? Everybody else is with us. So 117. Let's refresh it. Have we got 150? We want to smash it and then bring you more news. Here we go. We've got 133 likes now. Absolutely awesome. Brilliant. 133. Let's get 150 and we can carry on with the news. In 5, 4, 3, 2, 1. Wallop. Let's have it. 146. Oh, that was close. One more go. We've got the cheers ready to go. We've got the whiskey ready to go. If you find the magic jewels today, there's some surprises. We've got the gold jacket of money today. 3, 2, 1. We've got to be there now. We've done it. 154. Thank you very much, folks. Love you all. Appreciate it. Big cheer for you. Thank you. Marvellous. We're turning very green now. We're up 5 grand. There it is. Bam, bam, bam. Bosh. Okay, we're up $5,000 now. $4,700. $1.1 million in play today, and we are moving up. All in SpaceX. We are lowering our average. We're only down on SpaceX now 6%. The average is down about 30 to 40%. I'm down just 6.2, in fact, 6.18 on SpaceX right now. I'm loving it, loving it, loving it. So this could be a big, big rally when it finally gets there. So anyway, let's carry on. 8 minutes to go. Why is crypto moving on a central bank meeting? What's the point? Not that it does. Was the point not that it does not? Well, that's a good way of putting it, Sensei. I like that. In practice, Bitcoin is traded as a long-duration risk asset for years. Basically, what it does, it takes liquidity out of the market. If we get rate hikes, people are less likely to buy crypto. Simple as that. Crypto prefers a low-rate environment, all right? Two mechanisms here: cash and short-dated treasuries, paying near 4%, near compete directly with an asset that pays nothing, and a higher rates tighten global dollar. Now, of course, some of you will say, yes, but I get what's the word I'm looking for? I get a yield. And I know I was recently in Solana. I was earning a yield. I was also in Ethereum earning a yield. Yeah, it's all very well and good, but it comes out of dilution, generally speaking. We know that Solana is getting less dilution. There's a meeting at the moment about slowing the pace down of inflation. But at the end of the day, you're getting a yield, but the asset can also be devalued at the same time. So anyway. Who is Kevin Warsh, and is the Fed under political pressure? Warsh replaced Jerome Powell. This is his second meeting. We saw that. We covered it live from the White House. As the chair in May. Powell stayed on the board as a governor and still votes. Warsh was a Fed governor through the financial crisis and spent the years since as a critic of the institution he now runs. He killed forward guidance, cut the statement to 3 short paragraphs, and wants a smaller balance sheet. There we go. My portfolio is up now. It's starting to run again. Nearly $5,000. We're in for a hell of a day, guys. We've got 6 minutes to go. So let me skip through now. I've got more questions from you. I'm gonna gloss over the questions for now. So let's have a look. These are the numbers. We've got a 70% chance of no change at all. And that's what I'm expecting. I'm expecting no change. I want no change. Not selfishly what's good for me. I want what's good for the economy, because I like to buy at the market, and I buy as a high frequency contrarian investor. I am doing what the opposite of what everybody else is doing. I'm on my own. I have my own path, and I've beaten the market 3 and 4 years in a row. This is the only channel you'll see not sponsored by anyone. Right? We're a 100,000 channel and we're not sponsored by anyone. I turn down offers of 50 grand every day. I don't want it. I don't need it. I make money from doing the job, investing that is. So I don't want the markets to cut rates, even though it benefits me, because that's not right for the markets. I want what's right for the market. What's right for the market is ultimately right for me. Those that want what they want for their own selfish reasons, you always end up losing. If we say I want rate cuts, well, you don't. You don't want rate cuts. You think you do, but you don't. It wouldn't help you at all. It's like saying I don't want to eat fruit and vegetables. Just give me a load of crap every day. It tastes nice. Well, yeah, but you don't really, do you? You think you do, but you don't. The vote, 55%, 10-2. We've got Beth Hammock and Laurie Logan dissent in favour of a rise. The closing line, 50%. A conditional verb gets bolted on. And the energy caveat, the supply shocks, including energy, clause survives, possibly narrowed. And the press conference, 65%. Short answers. No September commitment, and a refusal to say whether policy is restrictive enough. We've got 4 minutes to go. Let me check my feed.
Turn life on.
There we go.
Groupon.
Typical CNBC, always on a commercial break. I never turn on the TV in America and find it on a program. Always on a commercial break. It just makes me drives me mad, it does. Like, what's wrong with it? I prefer the BBC. No commercials. Anyway, so what else have we got? Because we've got 4 minutes. We can do more of this. We can do more from our cheat sheet after the... I'll tell you what I'm going to do. I'm going to come back to the cheat sheet after the result. We've only got 3 minutes to go. So I'll tell you what we're going to do. We're going to switch to members only. And everyone who's a member of our channel can ask a question. It can be shared on the screen and we can support everyone. No one gets left behind. Every single person gets their comment answered. So let me just switch now to members only, just so we can answer every question. If we're in general subscribers mode, it's so busy, people get left behind and it's not as personal. And we've got 98% of our live viewers are members anyway. So it doesn't really make a damn bit of difference. Let me go to members only. Right, we're in members only mode now. So what I'd like you to do is repeat your comment. Repeat your comment, question. I'll read every single member's comment out. I will answer every member's question. Ask me anything you want about anything at all and I'll answer it. Okay, here we go. Pro member, potato family. Pro member here he is. It's his catchphrase, by the way. He's the potato man. We love it. Okay. So pro member here, any more questions, comments? We've got 2.5 minutes to go. We're about to bring you the numbers. I've got multiple sources set up. So let me refresh all the screens now. Playback speed that up. Make sure I'm right on it. Let me refresh this screen as well. I've got like multiple sources, Bloomberg terminal, you name it, I've got it to bring to you. Right, they are. The terminal is refreshing at the moment. So 3.75, that's what we're looking at. We want to see 3.75. Selfishly, 3.5% would be nice. For me, my margin would go down, but it's not good. It's not what you want. They'd have to give bloody good reason for that. But anyway, a rate hike, that wouldn't be so nice. But I could cope with it, and it wouldn't hurt SpaceX either. Not after the initial reaction anyway. 1.5 minutes to go. We're about to get the numbers. Here we go. Stand by.
What about you?
Here we go. Let's read these comments then. Martin, when is XRP moving and when are you getting back into SPCE? I'm getting back into SPCE and XRP in crypto when I've made a good amount of profit from SpaceX, because all the money is going there. I don't see any point in being in crypto at the moment. It's being siphoned. Space, SPCE, exactly the same. No point being there either. Tap the like button, folks. We got 45 seconds to go. And subscribe. Did we get any subscribers today? Let's have a quick look. Did we grow today? Let's have a look. Ready? In 3. You see it when I see it. 513. Yay! It's 116,519. Thank you very, very much indeed. All right, here we go. 30 seconds to go.
In the next 6 weeks and over the next few years, Warsh wants us to look at the data.
You ready? Expect CNBC to be behind. They always are. It's all the commercial breaks they're always doing. Right, here we go. Okay, we're 15 seconds away now from the rate decision. We have everything ready to go. We have all our
I think if we get
journalists everywhere, Bloomberg, CNBC, Bloomberg terminal. In 3, 2, 1, the answer is, it was 3.75. It is now. The rate now is, any second now. Any second, we're looking for 3.75. Markets are pumping. I'm up now, 7 grand. Could be a 3.75. It's a pause. It's a pause. That's what we wanted. Good stuff. We got a pause.
We've got stocks.
Here we go. I'm up 6 grand. Let's have a look. Here we go.
Now.
The Federal Reserve keeping interest rates unchanged at 3.5 to 3.25%. However, the vote was 9-3 with 3 dissents. Logan from Dallas, Hammock from Cleveland, and Kashkari from Minneapolis, all dissenting, and the 3 dissenters preferring a 1/4 point rate hike. Other than the notation for the dissent, the statement was exactly the same as last month, or virtually the same. It said economic activity is expanding at a solid pace despite elevated uncertainty. The source of that economic uncertainty is the conflict in the Middle East. It noted strong productivity growth and capital investment, as it did in the prior statement. It says job gains have kept pace with the workforce. An interesting statement that some economists said should have been modified because the unemployment rate fell, suggesting that is not the case. In any event, the statement says inflation remains elevated relative to the 2% goal, reflecting supply shocks, including in energy. And it ends with the terse statement once again: the committee will deliver price stability. That's it. It also adds that notion that they are going to maintain an ample reserve regime in the banking system. Brian, back to you.
There we go.
Steve
there
Liesman,
is the decision. As you can see, we have
Santelli in Chicago.
Let me just get rid of that. There we go. We have a rate pause, exactly what we wanted. SpaceX loved it. I'm 100% in SpaceX, exactly as I anticipated, exactly what I planned for, and I am very, very happy with that. Let me go and see how it's affected other things. The most important part is not this. It is the conference and how the tone is delivered about those dissents. That comes up in 27 minutes, so don't go anywhere. And then we have Sensei ready to go with a deep dive and all the analysis. He's running it all through his models now, and he's going to chart it and give you all the information on all your favorite assets. That will come up after this. So and then we have Meta earnings, and then we have Microsoft earnings. So let me show you all the positions. So there is my portfolio. I'm up today. I was down 50 grand earlier. Now I'm up nearly $5,000. I'm all in. It shows you different here because this doesn't show you my margin position. What you're looking on here is the overall position in this position. Plus I have my IRA and my Robinhood UK and Robinhood USA. $1.1 million all in on SpaceX. That's where the money is going, not where it is right now. That's why I'm there. The S&P was down. I sold the S&P months ago. It's been going nowhere. There's no money to be made here at all. And of course, we've got a big crash coming, no doubt about it, and a carry trade unwind. So I don't want to be in the S&P. Normally I'd say be there, but for now, no, it's rubbish. Virgin Galactic is going up with SpaceX. It's going up because there's no rate hikes. They don't need a rate hike. They may have even gone up with a rate cut. So Virgin Galactic like this. Expect a little rally on Virgin Galactic today. I am not buying this at the moment. Then we've got SpaceX. I am now down 6.42. I was down 14%. We've been using our lots. We teach you how to do that. And I've been trading up and down, making profit all the way down and lowering my position. Every day I'm down another $1 in average on my position. So that's getting better every day. Down just 6% now. And the average institution is in SpaceX between 130 and 140. So, you know, a lot of banks have been buying it recently. So I feel really great that I'm only down 6%. I regard that as a major, major win with all the pressures on it. Palantir is going up 2%. Very nice indeed. Gold's going up today 1%. We'll see what that means at the conference. The tone will tell us everything. Amazon's going up 0.32. Apple's going up 1.14. Enphase Energy, they wanted a rate cut because you can't afford solar panels until rates come down. However, they had a good earnings. They're moving forward on it. And things are improving in Europe, and literally all markets now are outperforming the US market. Emerging markets are, this is why I've left the S&P. Money is leaving America and going all around the world. Now, SpaceX is an American company, but that's the outperformer. That's going to do like massive. So Coca-Cola, this is one of my favorite asset to own. I warned everybody the price target is 90. We sold it a while ago, just after the CEO, James Quincy, former CEO, and said, you want to be out of this because once it hits 90, it's going to go down. And there it is. It's going down quite quickly now, as you can see. I've got a new price target for next year of 106, but I don't want to be in this right now. There's no point. It's the piggy bank. It's being raided once again. As we hit 90, everyone raids it, and they're going to go into risk on assets after this report. J&J, that's pretty good as well. The talcum powder situation is kind of none and done, really. It's resurfaced itself, but it's not an issue. It's done years ago. It's just paperwork. Chevron Oil, on Friday, we're going to cover oil. We're going to cover Chevron Oil's earnings in the morning. Join us for that. Lots to learn from that earnings call. Tesla, you don't want to be in Tesla. It's going to go to $80, I think, as SpaceX take it over. McDonald's is down today. Google is up. Risk assets like this. Remember, people like businesses like Google, Meta, Microsoft, Nvidia. They don't really care about interest rates. If you think about it, when they were last booming, the interest rates were going up. So they have piles of cash. They earn money from interest. They're not really bothered. It affects new emerging markets, new smaller companies, new innovative ideas. See, Microsoft going up, it's not bothered about this. It doesn't need a rate cut. Meta is up. The earnings is tonight. Nvidia is down. Nvidia is down just because it's being sold. Nothing to do with the rates today. Walmart is too expensive. Can't buy it until it goes to 100. Tilray Brands, no value whatsoever. Robinhood, too expensive. Vertical Aerospace, it's all sold off after the biggest air show in the world. We were there with our #1 roving reporter at Farnborough. Now all of that is sold off. We released all the new products. We were there with the press before the public even saw it. We told you all about it. We met the CEOs. All those are our members-only videos, members-only live streams. And there you go. Now it's all gone down because the news is out now. Everyone's taking profit. Bitcoin is up 0.8. There's no money here at all. I've sold all my crypto at the moment, and I'm fully in SpaceX at the moment. Same with XRP. I sold it at 115. We could be as low as 80 cents. So there is no big miracle there at the moment. Ethereum, same thing. I know this because I speak to the banks, Ripple, Robinhood, and there's no excitement around this at all. They're all focusing on something called SpaceX at the moment. Right, so there's my rundown. Now we're going to go back to Q&A, back to the cheat sheet, and we've got 20 minutes to go before we go into the most important part, the conference. Okie dokie, let's do some Q&A first of all. What did you think of Jim Cramer's comments about SpaceX, saying wait and buy the dip next week? Yeah, so what he's talking about, what Jim Cramer's talking about, remember, Jim Cramer worked for CNBC. He's about views. He can never predict crashes. He always has to talk about opportunity. And I know this for a fact because I've done 2 interviews, TV interviews with Bloomberg, and I know how this stuff works. In the last big housing crisis, 2008, when the market crashed, they would talk about crashes coming, and then they changed policy. It's not good policy to talk about markets crashing, people losing their businesses, losing their lives. You know, you've heard the stories, people jumping out of buildings and suicide. They don't do it. Why? Why not? It's the truth. They don't do it because their commercial sponsors don't like it. They don't want to be attached to that. That is the power of nonsense on mainstream TV. That's why their numbers are down, and we very often get more numbers than they do for FOMC events, stuff like that. Because everyone knows now that legacy TV is actually useless. I'm not being funny. It is. Tom Lee is a performer. Yes, I'm a performer. Yes, but I'm not sponsored and paid to do it. He is. He's got his badge, you know, with his granny shots and his Ethereum and all the rest of it, and he's paid to do it. And the whole glass is there, the floppy hair, the looking down the lens. It's all part of a theatrical performance. But anyway, so they can't say about crashes anymore. They have to say opportunities. And no matter how many times Tom Lee predicts about Bitcoin going to 100,000 and it's wrong, it just becomes another opportunity because he didn't get it right. Never admit they're wrong. Never say I messed up, because they can't. And they can't say crashes either. So your question was, what did you think of Jim Cramer's comments about SpaceX? So Jim Cramer, again, the same thing. Opportunity. He wants you to tune in next week. What he wants you to do is think the markets are going to sell off when everyone unlocks the shares. But what no one is talking about, and I've spoken to people who are founder investors, they're not selling. Some are, of course. But this idea of a mass exit, one, it's already priced in. We've already gone down ridiculous. And everyone thinks it's going to happen, so it's not. And that's the problem. And the reason why people think it's going to happen, because no one's got anything educated to say. So they just make it up. It sounds plausible. Well, when we get unlocks, everyone's going to sell. It's a good story. It's an opportunity. It's not a crash. It's an opportunity. What if it doesn't happen? Now, it might happen, and I might get margin called if I'm completely wrong, but I don't think so. I told you days before, week before, that the banks were buying into SpaceX, and I told you about the government's executives that were buying into it. And then yesterday I gave you all the names and numbers of all the people that have been buying from the government. I have a direct link for the White House press room contact. So I shared it all with you. So that's why I'm in 1.1 million with SpaceX. Absolutely bonkers, the stuff that people come up with. Anyway, and a lot of social media influencers, and I hate that term, don't you? I'm not. No one pays me to do anything. Not that they offer me. They do. I get offered 50 grand a day, but I don't take it because I want the channel to be successful by itself. I make money from trading. I don't need to be given money to say stuff. And the narrative is that when the unlocks happen, we're all losing our money. It's all going down the toilet. And that sells stories. People watch that stuff and it gets you to engage and so on and so forth. But I don't believe a word of it. So UK investor, I don't need to wait for Jim Cramer to make a statement about the market crashing, because he won't. It's just an opportunity. I am preparing for lower and lower. That's why I'm trading dips. But I'm not trading lots to get the lower positions because of a crash coming. I'm doing it because that's what I always do on every stock. Whenever I buy something, I focus on not making profit. I focus on finding the bottom for future profit. And that's how I've beaten the market 3 and 4 years in a row. So because we've got lots of new people here today, I'm going to ask my members who watch every show, because I'm live up to 12 hours a day, would you fact check me to the audience? There's 525 people watching. So I'm going to ask my members, my Discordians and YouTube members who watch every day, is it true, yes or no? Have I beaten the market 3 and 4 years in a row? Do I share all my trades? Do I share everything? Do I answer every question? Is everything completely transparent? Is this all my money in the world? Do I, I don't put my money somewhere else. It's all shared here. Do I do 2-stage events every single day in Discord? And it's all live, all unedited, all unscripted, and one-on-one support, no AI, no bots, genuine stuff, not sponsored by anyone. If all of those yeses, say yes in the chat. If I lied and exaggerated about anything whatsoever, then say no, Martyn, you're a liar and a scammer. And you will see from our audience now, if you are new here, you will see hundreds of yeses from our members, because it's easier to tell the truth than it is to make it up and lie and so on. And that's what we do. That's why this channel has not only the 100,000 plaque, but it also, which is nice, it has the verification tick. If you look on our channel, there's a big tick that was given to us by YouTube. It means genuine and authentic. It's a big thing to get on a financial channel, and we have it on ours. And also, we have the best practices 5 years in a row of memberships. No rise in prices, no inflation, best service. And again, ask all our members. You've never seen a price rise. There's no inflation. We're giving you better service every single day. So there we go. All right. So that's how it works. Okay, let's carry on. Thank you for all the yeses. I appreciate it very much indeed. What's up, says Stevie ZBCN. How are you, Dinos? So they're going to keep kicking the can down the road. This economy is trash right now. Well, Dinos, understand one thing. By leaving the rates higher for longer, it's putting pressure on the market. It's still doing a job. It's a lagging indicator. It takes years for these things to have an effect. Trump says you can up the rates, down the rates in 5 minutes. It doesn't work. No economist on earth says that works. So it's important to understand that, right? So rates up for longer, put pressure and contain the market. It's the right thing to do. It's not the nice thing to do. We all want zero rates. We all want loads of money, but it's not the right thing to do. All right. Anyway, high energy. Bloomberg reported up to 10. By the way, this is the real high energy, not the one that has been copied by some bad actors who then copy this name and pretend that this person comments to their videos. No, high energy. This is the real high energy. He's a very positive member of our family. It's become a new little pastime for a few trolls to actually copy other people's names and then pretend those people are commenting on their videos when actually it's the same person just being 3 or 4 of the just himself pretending to be other people. In a minute they'll have me commenting on myself. It's ridiculous. Anyway, so this is the real high energy, folks. We need to nuke the filibuster to pass the Save America Act and Clarity Act. Thank you for sharing that high energy. Maximum employment. It's a zoo everywhere, all the time. Everyone and their brother has a job. We need a huge recession to drive these people back under a rock. What a funny way of looking at it. Interesting. Hi, Martyn. Have you heard of any mention of the test launch for Virgin Galactic? No, I haven't yet. Thank you for all the yeses. That was very much appreciated, everybody. Wake up, Neo. Everyone thinks the shares unlocking will cause mass selling. Why would those employees sell at the bottom? Not worth the tax burden. Well, let's just clarify what this is with 14 minutes to go. The biggest story from social media influencers who don't influence anything. They don't influence the government. They don't influence me. They don't influence banks, institutions. They influence people that can be easily influenced. And to be fair, it's just low-picking fruit. If you're influenced by, a bunch of idiots on YouTube telling you what to do, and I don't tell you what to do, do I? And I share with you my real position, my real money. You can see I'm all in. They're not showing you. Then that's on you, I guess. And this is very important. If you understand ChatGPT like I do, a lot of people say they talk to ChatGPT. They use it as a Google search engine, and they ask it questions. It gets to know you. It remembers you. And its idea is to deliver you the answers that you want. Not make them up. I don't mean just make up any fantasy, but you can train it to be the way you want it to be. So what people do on social media, if their stick is always, the market's going to crash or it's going to go to $1 million, all this extreme stuff, and they talk to their ChatGPT. The ChatGPT knows their YouTube channel, it sees their style, and it suggests things that works for them. All right. So when you are a social media influencer or a YouTuber and you're talking all about the unlocks and the market crashing, and you talk to it like that, it comes back and goes, well, yeah, that could happen. Yeah, that could happen. And it probably will, and so on and so forth. And because it can, of course it can. And it's not wrong to say it, and it's not right to say it. It's not there as your financial advisor. It's not there to advise you. It's there to give you an answer that you pre-programmed it to give you. So all over social media now, everyone is saying, I've only found, I told you the other day, about 2%. After we did a great deal of research, we used some AI to go out and find all the positive channels, all the negative channels on SpaceX. And 98% was all about the market crashing, which full well then is going to be the opposite, all right? Every professional investor, I've been doing this since I was 17 with Barclays Bank. Everyone with money, everyone who's fully in. I mean, I'm in with 1.1 million. Everyone knows you always do the opposite when everyone down the pub, all your mates who don't even invest are saying the market's going to crash, it's going to go up, right? It's always the same, every single time, right? These are unqualified buffoons making up stuff because they just don't know any better and they want to sell some videos or sell some advertisement for a sponsor. I'm not sponsored by anyone. So they've told the algorithm and what they want to give them the answer, and everyone's saying it. Well, the smartest people on earth were given stocks rather than wages. That's how it was. Now, how have they survived? Because these are the smartest people. These aren't poor people. These aren't people on minimum wage who says, okay, I won't earn any money for 4 years, pay me in stock options. These are the best people in the world that have money of their own. They don't need the stock. So yes, they're up. Yes, they can make some money. And some will sell and some will trim. But the mass exit is utter nonsense. Now, it's not true because Ross Gerber, who's always making up nonsense, always, it's like Meet Kevin, always self-interest, which always ends badly. But some people that's how they live. They're always for themselves. Ross Gerber, who's a billionaire, has invested famously $1 million in SpaceX. And he's the influencer. He's the big guy. Well, I've got 1.1, so bugger that, mate. So, yes, he's got more profit than me because he bought it when it was pennies. So he's a billionaire, right? However, he's got $1 million in SpaceX. That's what he invested. I've invested 1.1 million, and I'm just a guy on YouTube, right? So, and I'm just a regular person, okay? So, but he's the face of retail, and he's told people that all the people that he advises on his fund, he's told them all to sell, and they're all going to sell. No, he's not. He's saying that to take it down so he can buy some more. It's utter nonsense. They're not all going to sell. Some will. And here's the proof that they can't sell. Let me tell you why they can't sell. If on August the 4th, when we get the earnings, which we will with SpaceX, you know full well that Elon Musk is going to pump it up like crazy. He's going to give us all the good stuff. And I know one of it. I know all of it, one of it already. I get some information directly from SpaceX. We're going down to Starbase. We're going to touch the rocket shortly. I'm planning that with a guy who works there who can get me right up to the rocket. Anyway, we know that that the next mission, number 14, is going to attempt to be a catch Starship. That is it. That puts SpaceX years ahead of where they thought they would be. It's fantastic. They are attempting that on the next one. They've not declared it yet, but that is what I know to be the case. All right, that is their ambition, to catch Starship on the next flight, next launch. That is huge. That is massive. Now, the other thing is, I told you about the people that were buying from the government behind the military contracts. Everyone's talking about AI doesn't make any money, or Starlink isn't going to grow fast enough. Starlink is going to grow fast enough. And here's a top tip. I guarantee you, on the earnings, you're going to hear how fast Starlink has actually gone ahead of schedule that most people aren't even talking about. So you're going to get a surprise. Starlink has made a lot more money than you think. That's going to be on the earnings call on the 4th. All this will be great. Market will rally, so on. Short squeeze, biggest short squeeze in history is likely. Everyone's going to lose their money that have shorted the stock. That's the first thing. And then we have this thing about everyone dumping their stock. It's not going to happen. It isn't. And I'll tell you why. Because if we get that amount of volume and that volatility after the earnings, you won't be able to. If you set a limit order going, right, I'm selling at $120, and literally hundreds of millions try to do that at the same time, it won't happen. And what will happen, it will start filling orders, and it will fill orders on the way down. And people will be selling for losses all over the place. You can't exit any stock altogether at the same time. Forget SpaceX. It's utterly impossible. 7 minutes ago, before the conference starts, stand by. It's utterly impossible to all exit at the same time. So it won't happen. And if this wasn't the case, let me prove it to you. If you are a high wealth individual and you do $1 million trades, I do $1 million trades. If you do really big trades like this, you can set stop orders, right, with insurance, because stop orders don't guarantee a trade. A lot, you remember GameStop and remember Robinhood. A lot of people going, oh, I can't sell, I can't buy. You can't. It moves too quick. The market can't keep up with it. Everybody can't sell at the same time. Why? Because who's buying? Everyone can't buy at the same time as everyone's selling. What's the price? No one knows. It all happens too quick. It doesn't work that way. So no one is all going to dump at once. But it doesn't sell videos. It doesn't sell stories to tell you it's all going to be fine. It's not going to boom. It's not going to bust. It's just all right. Well, if I put that on a thumbnail, August the 6th, it's not going to pump, it's not going to dump, it's going to be all right. Who the hell would watch that? Everybody wants to go, it's going to go to zero, it's going to go to 1 million. The reality is something in the middle. It's a way to build more position. So anyway, and when I've spoken to some people, I've spoken to 2 people that work at SpaceX. They're not going to dump their position. They said they might trim some, but these are wealthy people. They don't need the money. The people that are saying they're going to dump are people with no money. They've got no money and they're going, well, I would. I've seen people say it. I've seen people with literally nothing in the bank, no money whatsoever, and going, I would sell. Well, of course you'd sell. You haven't got any money. You live at home with your mum. You'd love to get $1 million, but you don't even have. You're not even invested. It's always those people. The people that keep saying everyone's going to go and dump are generally living with their mum at home, and they go, well, I would sell. You haven't even got a skateboard, mate. You're not even buying SpaceX, are you? You're not going to dump it. You don't even own it. Well, I would if I had it. Yeah, but you won't, and you don't, and you won't, and it doesn't. It's nonsense. So anyway, but it doesn't sell stories. It doesn't get. No one queues up to sell this stuff. You know, you've got to come up with a big dramatic headline. But anyway, there it is. Anyway, 4 minutes to go. What's important is the presentation.
Right now,
stand by.
Given the pullback in some of these,
we're going to cover this in a few moments. Now, right after the conference, we're going to Sensei. Okay, Sensei is going to provide you with the chart, the technicals, the analysis, the debrief of everything we've seen, all the numbers processed, so you can understand how to trade it. He's going to give you price targets, charts, all the technical stuff that I don't do. I don't do any of that stuff. I just call people that work at the factory and go, "Who's buying this?" That's me. I'm just that guy, right? I read a balance sheet and go, "Okay, it makes 1 + 1 = 2." Okay, I get it. Who's buying it? Everybody? Who's going to sell it? Let me find out. Okay, right. What does it owe? What's its debt situation? What's its proprietary uniqueness? How unique is this business? Yep, I like this business. And I just go, there's $1 million. That's what I do. Sensei will do all the charts and all the technicals. Right. Okay. Are we live again covering space widget? I don't know what you mean. We're covering the FOMC. Anyway, laughed my arse off says, what's going off? Why is everyone laughing? Do you think the market will crash this year? Yes. Yeah. And least affected will be SpaceX, by the way. Now, people go, that doesn't make any sense. I know you're a contrarian, high-frequency, $1 million investor, but just saying the opposite all the time isn't very smart. I'm not saying it because I just fancy it. We all know that SpaceX is expensive. Well, why wouldn't it sell then? It's expensive. Just because something's expensive doesn't mean it will sell. There are things that have no value whatsoever that boom. Just trending, that's all. But when it comes to a crash, things of no value, expensive stocks not necessarily crash, but things on the Russell. I never buy the Russell. Half of it's rubbish. In fact, 10 years from now, 80% of the Russell will be bankrupt. You ever think about that? Go back in history and look. Take those indexes and look, and you'll see that a big, high proportion of those businesses don't even exist anymore. Businesses you thought would never go bankrupt. Oh, no, that'll last forever. People have even said to me, SpaceX can't go bust. It's too big. Of course it can go bust. 1 + 1 = 2. $1 billion plus $1 billion is $2 billion. It's exactly the same. It doesn't matter how big or small you are. You can go bust. If you spend more than you earn, you go bust. It's as simple as that. No question. And with the big businesses like SpaceX, they're spending a lot of money, investing a lot of money, and things can blow up really quickly. Literally, you blow up a rocket and there's $1 billion gone down the toilet. So yeah, exactly. Don't say that SpaceX can't go bust. I don't think it's going to go bust because its balance sheet is great. It has just a bit more debt than cash, but it can virtually pay off all its cash today. But it's got the full support of the government. It's going to be behind all the defense contracts. So and government officials are buying it. So 1 minute to go. Let's get Kevin Walsh on the stage.
30 terms on there, but task forces.
Here we go.
Which means, I mean, maybe it isn't.
Expect CNBC and Bloomberg to be behind. They're always behind. They're always on a break. Does anybody even watch legacy TV anymore? Probably not. We've actually had, when we did Brad Garlinghouse live with us with the 60 Minutes, do you remember that? With the 60-minute interview. We had more people, we had 130,000 watch. We had more people who watched it on our show than on 60 Minutes, their YouTube channel. Crazy, right?
They're great. Then I think
not really, because we have an engaged audience. But it is weird when you think about it, isn't it? Anyway,
so they will.
We have 98% of our live viewers are members. More than CNBC, Bloomberg, Mr. Beast combined. 98% of our live viewers, members. How about that?
Convince everybody that he's serious about inflation, right? I mean, that is the reading a lot of people are going to take away from this. That
okay, so here we go. We're about to go to Kevin Walsh live speech. This is part 2, his second speech. This is where it all gets exciting. The language is everything. We're covering it live, watching the markets, and then we're going to break it all down with deep dive analysis right after this. Let's go.
What is it that is going to take him over the line here and say, okay, it's time we do something about inflation?
Yeah, I know.
Wait for Kevin Walsh to take the stage.
Interest rates, but they care about mortgage rates. and interest rates, the bond market affect mortgage rates. Should they just get used to just having a 6.5% mortgage for the next few years, David?
Yeah, again, the problem is you can't put the GE
Stand by, we're just waiting for Kevin Walsh to take the stage.
Mortgage rates were kept too low for a long time. We are gradually working our way out of that, but that's going to take years.
Just stand by any second. Tap the like button, folks.
Yes,
and consider subscribing as well. It would be wonderful. Thank you very much indeed.
The is actually by affecting the housing
Do we get any more subscribers during all of this?
Which cannot be afforded at normal mortgage rates because there's nothing.
Kevin Walsh will be out any second now.
But it's fascinating to hear the president himself
519
talk about this and wants a situation where home prices don't fall because the existing homeowners get hurt too. I think we're seeing Walsh approaching the podium here. Here comes the Fed chair for his second ever press conference.
Good day. My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
Thank you for taking our questions, Mr. Chairman. Sure. You've had a couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message. Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman. And I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if its real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so
Sorry.
I'm sorry, it's your question. So interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly, but the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Claire Jones, Financial Times. You seem to have got the family fight you were after at this meeting. We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much. Not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Neil. Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. It suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely. But my own judgment is this is a period of watchful thinking, not watchful waiting. And I think the score on that vote was unanimous.
Colby. Thank you. Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy if inflation continues to be elevated through the forecast period? Interest rates could well be part of that solution, but I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do. The inflation target, making clear expectations is one part of it. Making sure we demonstrate we're responsible for it, we're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in the statement? Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't
reaction
matter.
Analysis coming next with the charts with Sensei. Please stand by.
Are these shocks
next,
broadening in their effects, broadening in their impact on prices that are quite far removed from it? Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months, we're going to refine that view and have a better judgment. And we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big, hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause. They reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you've characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is a tendency, especially with the proliferation of meetings and press conferences, to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more. What are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to the global economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now and Jackson Hole, which is I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple of weeks, I'm going to be doing a check back in. I've given them time to sort of think hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Nick Timmeros of the Wall Street Journal. Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here today at this press conference is I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what productivity is. And in some sense, there's a race between supply and demand. And the surge in business CapEx in around AI, it's making that calculation a little harder to judge. But in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and commitment. I didn't hear anybody walking away from it. The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said to one of your colleagues, I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So they're gauging themselves how restrictive the Treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear North Star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and leans, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you don't offer your reaction function or your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. They don't want your dot. We just want your reaction function. Part of me hears what we really want is your forecast. And what we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time in a lot of countries, coming out of the 2008 crisis, we're in crisis mode, we were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity as if we're tying our own hands behind our back. Well, in crisis mode, that strikes me as a very prudent policy. But in more benign conditions, it strikes me as worth revisiting. But markets and market participants and reporters have learned to devour all that information, so I take seriously that the pullback of forward guidance requires some transition. Reform isn't easy, but our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Paul Weissman. There's a mic coming.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give two answers. First, let me give the proper standard answer. The Federal Reserve every January outlines a statement of purposes and strategy. And in that strategy document, which I believe was dated January of this year, it describes a measure of PCE inflation as the objective function there. I have enough of my own, so that's our number, we're sticking with it. Who knows come after next January what we might say about strategy. I suspect the task forces might have something to add. But I'll say this, some version of the Lucas critique, some version of Goodhart's law in economics.
Lucas critique,
should
that's what we
remind
need.
us
The Lucas
that
critique,
when
well, that's what you're going to get
in
about 5 minutes from Sensei.
Of inflation
Charts,
or something
technicals,
else.
the analysis,
and we describe
stand
those
by.
measures as being consistent with our objectives. We might make them such that they're not very good measures or very good objectives. Broadly, if you said to me standing in front of you, I abide fully by the strategy document, we're going to deliver 2% inflation and not a whisper more. But to achieve that, I'm looking at a broader set of inflation data than PCE. So without sort of fully revealing my cards, I'm trying to understand, like my colleagues,
Lucas critique.
what's the underlying generalized change in prices that are happening in the economy. It is not a perfect science. I might have said 42 days ago, I've got a task force for that. But we have a data project that's trying to look and see whether we can't separate the noise from the signal. And so if you would hear a message from me, yes, I care about what the PCE prints are. I care about what the contributions are from CPI and everything else. But my lens is broader than that, even though the remit is quite narrow.
Mike McKee.
Michael McKee from Bloomberg Radio and Television.
It's Mike McKee, Sensei's favorite person.
With
Here he
some
is.
of what you've said today,
Mike McKee.
and maybe you can help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates, but all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
Yeah. So believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty? So the decision we made today, the discussion we had in that room, was the farthest thing from inertia I can imagine. As a point estimate at this very moment, in a choice between two alternatives, you heard the results of it. But I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target is advanced. And over the coming months, I expect it to be advanced much more significantly. If you were to if I were to steal a follow-up question, I won't let you, you won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done? I would again reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of financial markets, I think what they're broadly saying is that this committee does own it, has the credibility to deliver it, and they believe, like I do, that we will. But I don't want to leave you with a misimpression. We've got no magic wand. This isn't something that we're going to be able to carry out in days or weeks. But we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year to back candidates who oppose stricter AI regulation, how can the public be confident that a committee he co-chairs will provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry?
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem. The comfort that I can give you and your listeners is we're the decision makers. The chairman of the board of the Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but not at all determined by, these outside groups. My theory of the case in establishing the task forces were to pick people with extraordinary talent, depth of expertise, and a divergence of views inside every committee, so they too can have a family fight. This is not outsourcing to people that aren't known and haven't been vetted. This is seeing whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation. And yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation and what you plan to do about it?
Sure. So, Ann, I hear from you what I hear more broadly from households and businesses: impatience. Deliver it already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes, and they have tightened financial conditions in this intra-meeting period, and that has given us that has provided us some comfort that we've got the ability and capability to deliver.
And is your read or your, I guess, faith in markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be a very good source of information, not a determinative source, not a perfect source, but if we're trying to land the plane and deliver 2% inflation, and we take a very useful source of information and we get it all fogged up by giving it our own forecasts, by providing rolling commentary, I can assure you that we're going to have less information, less ability to land the plane successfully and deliver price stability.
That's
we're just trying to make sure that that source of information is as direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other surveys. But if you're hearing from me, we wanted to make sure we were getting a better source of information. I think in a relatively short time we are.
We'll go to Brian Chung for the last question.
Hi, Chairman Warsh. Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So apparently it was news that I had a press conference. Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. Well, that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all with different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight.
I sense a problem here with the Fed.
Reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
All right. Okay. I will give you a take on that. I'm going to hand you over to Sensei now, and we're going to have a full technical breakdown, charts and everything, how to trade, what this really means. This is the event I've got lined up for you. It'll go there automatically. Sensei is waiting to deliver you a technical review. He's going to be talking about crypto as well. You can see XRP in the thumbnail. How you can trade this, what it really means. It'll break it all down for you. I'm going to give you my opinion quickly, and then I'm going to hand you over to Sensei. And then after Sensei, literally in 45 minutes, we are back to back for you. I'm back again. I mean, I've literally been live here since 6 o'clock this morning. I've been going like 6 bloody hours. Here is what comes up after Sensei. Meta earnings. And then right after Meta earnings, I hand you over to Sensei for Microsoft earnings. So big reaction to this tonight, okay? But before I hand you over to Sensei, and all these things will happen seamlessly. Just stay right where you are, and it'll all go from one to the next seamlessly. I'll give you the link now, but I'm going to give you my quick reaction to what I've just heard. And there's a little bit of a concern here for me, if I'm honest with you. That's the only way to go. So let me just drop this in here. Here we go. Drop this in here. Live next. Sensei's literally waiting to go. Sensei, can you let me know you're good to go so I can send to you? I'm pretty sure you are, but there you go. There it is. Live next. Let me replace the pin. It'll automatically take you there, but you're going to click on it. It makes it easier. Some people go, it doesn't work on auto, depends on your device. But what I heard there was the press, you hear the phrase, the market will test the Fed. There's a dissent brewing. You can tell the language. You can tell the language is a bit strange. He's a very calm, laid-back type of approach. And that gets you so far, but it will come across like just not bothered. It will come across as complacent. The market won't let him get away with that. And the Fed, the committee, sorry, the press conference, the press media won't let him get away with that. They'll test it. They'll push it. They'll come out with all kinds of stories and narratives to push him. He's going to have to come out with a bit of energy. I think we've got a little bit of introduction to Kevin Warsh, and he seems very, that's all right, it'll be fine, and don't worry about it, and I'm fine, and we're all fine. I know. The markets and the press will not allow that. They've given him a little bit of free rope because he's new, but he won't get away with that on the next one. By Jackson Hole, he's going to be slammed. They're going to come after him, and they're going to want answers, because it's very much like, well, don't expect anything now, and it's all good. His mannerism, his tone comes across like it's all just taken care of. Don't worry about it. Whereas, for households who have had inflation and interest high all this time, they're not looking at it as it's all right. So it's all right for him. It's all right for a lot of rich people, but it's not all right for average folks. So I don't think it's all quite the way he wants it to be. I think he's got to start raising his tone a little bit of confidence, and not. I mean, it's confidence, but it's sleepwalking confidence. It's he's not shutting anyone down. He's not taking control. He's just going along with the flow, and they're letting him do it. They're letting him do it for now. But I bet you any money you like on the next event, which we cover, Jackson Hole or the next FOMC, they're going to start stepping up the questions and not accepting the answers. Because, you know, to say I've only been in the job for 42 days, whatever it was, it's been a long time since we've had the mission of bringing rates down and inflation down, and it's still not. So what are we doing? We're not getting results. What are we doing? We're not getting results. We need some action, not just talk. And that was kind of like being dropped into that debate. And let's see how the markets are reacting. So we've got, in fact, I'll go through the old thing here. SpaceX is going down. Let me come back to my main portfolio. I've got Sensei ready to go just in a second. Let me show you a few things here. So if we look at my portfolio is just basically SpaceX, 100%. It's up and down like a bloody yo-yo. I've got $1.1 million. That number there is prior to margin, and it's only 1/4 of the whole thing. The S&P is going down. It kind of started to go up through his speech, and now it's dumping. It's not impressed. Here's his first test. This is why I'm out of this. This is why I'm out of the S&P. There is a crash coming. There is a correction coming. There's a lot of complacency building now, and the press are going to be like, "We're not having this." I tell you that for nothing. People that I talk to are going to get tired of that soft approach very quickly. Anyway, the S&P is going down. Didn't like it. Virgin Galactic, it rallied up. No rate hikes. We like it. But now it's like, yeah, but what? There's no. Is there a direction? Remember, he talked about what's the word he used? Subcommittees. What was it? He puts it out to think tanks and stuff like that, and that wasn't mentioned today. But a lot of people are like, well, what does that mean? You just, other people are going to do the work for you. Are you really into this? Remember, Trump put him in there. Anyway, see how long Trump puts up with that. Anyway, SpaceX is selling off, but then the whole market is now. Look, Palantir, it dumped on it. Gold, well, whatever. Amazon going down. We've got the bigger story tonight, Meta and Microsoft earnings. I'm back with the Meta and Microsoft earnings in the next few minutes. And half an hour, I'm back with that. Sensei is going to do the interim for you. He's just telling me to hold on. When you're ready, Sensei, let me know. Enphase Energy going down. Now, they got no rate hikes, didn't get a rate cut. They wasn't getting it, but they're selling off as well. That tells you they're not confident about what comes next. Coca-Cola? Well, when I said to you before, when all markets go down, defense and risk on, then you know there's a little bit of a wobble coming. Well, there you go. Markets selling off. Coca-Cola is going down as well. That's why I'm out of that as well. I think much more money can be made in SpaceX. It will kind of be separate from the market, in my opinion. J&J going down. Chevron Oil Friday, we've got the oil. Tesla going down. McDonald's going down. Google selling off. Microsoft selling off. That's into the earnings. We're going to cover that in a minute. There'll be the results in half an hour. Meta going down. We're going to cover that. Two big earnings tonight. A lot of it's to do with that. To be fair, it's not all just Kevin Walsh was a bit lackluster, I would say. But I think you've got preparation for tonight's earnings. Typical to sell off before the earnings of these Mag 7, especially in the situation we are now. Okay. Sensei needs another 5 minutes. Okay. Tilray Brands. Tilray Brands is just worth nothing. Robinhood down. Vertical Aerospace down 9% now. Bloody hell. Look at Vertical Aerospace. Worth nothing. $1.23. Worth nothing at all. Is that an all-time low? Oh my God. Vertical Aerospace is, that doesn't get better. That doesn't get worse than that, does it? $1.23. Oh dear. Yeah, the markets aren't liking this at all now. Semis going down. Crypto going down. No money's going to go into Bitcoin at all. It's going to go into SpaceX, I'm telling you. It's going to go into SpaceX. I sold all my crypto. I know where all the money's going. It's going to SpaceX. I'm not just telling you that because I'm in it. It makes no difference if you all did it or not. It's too big. We're not going to affect it. But that's where the money's going. That's why I've got 1.1 million in SpaceX. Anyway, there you go. So what I'm going to do now, I've got to hand you over to Sensei. He'll be live in a couple of minutes. I've got to end because I've got to go get ready for Meta. So here is, I'm giving you the link. I think it's pinned to the top, right? Let me check it. Yeah. Okay, it's pinned to the top. We're going to break down what the numbers means with Sensei. And here we go. Here is, there it is. Okay. This is Sensei's event. Let me show you on the screen where we're going next. And then I'll show you what I'm doing after that. Okay. This is where we're going next. FOMC report, breakdown, analysis, technical charts from Sensei, a different perspective than my own. And then after that, you're back with me again. Bloody hell, you can't get rid of me. I'll give you the link for it now. At Sensei's show, we'll take you directly to it anyway. I might be 5 minutes later, give Sensei a chance to do his thing because I'm going half an hour before Meta. So I can go 15 minutes before Meta. So there's a little bit of grace period there. And this is what's coming with me. There I am. I'm doing Meta earnings. Okay. So Sensei is going to do Microsoft, which follows Meta. So you can watch the Meta, then you can go to Microsoft. So we're back to back. Like 15 hours today, all the way through. You've not missed anything, right? So there you go. No one works harder than we do. Okay, so I've got to send you to Sensei. So Sensei might not be live for another couple of seconds. He's literally about to go, but I'm going to send you there, and then Sensei will send you to Meta, and Meta will send you to Microsoft. Any quick questions? Do we have any questions? Let me see how you reacted to all of that. Let's have a look. He is an AI pusher. He works for the corporations. Finally caught up to the live. Excellent stuff. I feel that first question from Mike McKee was not answered strongly enough. I agree. He cares about big business and friends making money. Trump signing things live. Oops, speaking live. Sorry. Yep. It's nothing too important though tonight, Terry. Bank of England expected to raise rates by 0.25. Oh, tomorrow. There you go. Raising rates now. He does not care about the average household, said searching for truth. Seemed to backpedal on those questions. Yeah, it was very loose. He seems like a really good guy. Okay. I mean, yeah, he might be a nice bloke, but I mean, you know, we need inflation down. Outdoor building. The Fed meeting was another waste of time. It wasn't very exciting at all, was it? Everything is fantastic, says Terry Rose. He's a member of the global elite and owned by large corporations. Yeah, I don't like his disposition, says Stonks for Space. The Fed guys do nothing and are paid a fortune. They're not paid a fortune at all. That is not true at all. They're not paid a fortune at all. I think I earn more than Jerome Powell did. Jerome Powell, I think Jerome Powell's salary last year, I think it was 140,000. I think it was. He gets paid for other things like speech, you know, if he attends a private event to speak, signing books, you know, book deals, but his actual salary from the Fed, I think it's $140,000. I'm approaching that. So he's not paid a fortune. In fact, I earn more than that because I trade that. But that's not the point. My job, yeah. Don't think it's a top paid job to be the Fed. Same as a president. To be a president isn't a top paid job either. It's the external things that you do that can earn you money because you're the Fed chair. Anyway, do you think it will be a crash? Yeah, there's no question about it. I've been saying forever. He said the economy is doing great. Should be good for oil. Says Search for Truth. What's the meta with you? Oh, very good. So now everything retreats. I made a quick 8% profit today. Congratulations, Petra. What with? About About 200 grand in salary annually. Is it? I thought it was $140,000 Chair Powell got. But anyway, after tax, 120 then? Basically what I just said. Anyway, look, I'm going to send you to Sensei. I will be live at 1:30. Oh, Sensei's live now. Well, he's not live now. He's going to go live now. Okay, guys, links in the chat. I'll be back straight after Sensei with Meta. The Meta earnings, and then we have Microsoft earnings. What a busy night we've got. So here is the link to Sensei. He'll give you all the charts, the breakdown, what it really means. There we go. Thank you very much for tuning in. I hope you enjoyed it. It was a pleasure to have your company. See you back in half an hour or 45, just after Sensei, for the Meta earnings. I want to see how Meta reacts to this, and then Microsoft. And then tomorrow, we've got the inflation numbers. All right, that's it from me. Sensei's live right now. As you see, there he is. The countdown has begun. Okay, guys, join Sensei right now. Click on the top, or it'll take you there automatically. See you back in a bit. Until next time, as always, take care of yourselves and each other. Ta-ra for now. Bye-bye.